If you want to make your hard-earned money start working for you, you could put your money into the stock market, but the stock market could go down. What if there was a place to get a high interest rate, have very little risk, you can sleep very well at night about the safety of your money, and easily have access to your money whenever you want? Sounds a little too good to be true. But luckily, Fidelity and Vanguard make it all possible with their money market funds, which just raised their interest rates yet again. When we're chasing our dreams of being financially free, it's going to be hard to say no to essentially free money. Opportunities come infrequently in life. When it rains gold, put out the bucket, not the thimble. We should be thanking Uncle Jerome, the Fed chair, who said the economy still needs to slow and that the labor market needs to weaken for inflation to return to the bank's target goal of 2%. This is now the highest interest rates have been since 2007, reaching an interest rate of 525 basis points to 550 basis points. What's even more amazing is the Fed could raise interest rates yet again later this year, based on what the economic data is showing, which means even more passive income for us. Powell said it will be on a meeting-by-meeting basis to determine if another hike will come, but one thing that certainly won't happen is an interest rate cut. We'll be comfortable cutting rates when we're comfortable cutting rates, and that won't be happening this year, Powell said. Remember guys, the Fed raises interest rates to cool down inflation. The government printed a bunch of money during C19. The US printed $7 trillion in a 2-year span. That's nearly 1/3 of all dollars in circulation in US history were just printed. That's why inflation was so ridiculously high, peaking at around 9% last year. It has cooled down a little bit, down to around 3% as of today. That's the main reason the Fed has to raise interest rates. But they also raise interest rates to make sure the economy doesn't expand too quickly, and that would create asset bubbles. It also does it to discourage excessive borrowing and risk-taking. Countries also do this to increase their currency's attractiveness to foreign investors and just overall policy flexibility for possible downturns. All right, so what you really care about is those money market funds and those interest rates. So uninvested cash in a brokerage account gets swept into Fidelity's money market funds, also called their core position. A core position is automatically started when you open a Fidelity account. There's no additional work to do on your end. So Fidelity has 3 main positions here. We got F-Cash, which is just a free credit balance, and it offers a 2.69% interest rate. But the main ones we really want to focus on are the Fidelity Government Money Market Fund, or SPAXX or SPAXX. They offer a 4.96 7-day yield. And then we also have the Fidelity Treasury Money Market Fund, FZFXX. And they also offer a 4.96% 7-day yield. There's really not much difference between the two of them. They both offer a super juicy yield of just under 5% that you're going to be getting on your uninvested cash that's just sitting there in your brokerage account. These money market funds invest in government assets such as treasury bills, coupons, strips, repurchase agreements. You can sleep very well at night with these investments because Treasury Securities, they are considered to be the safest investment out there in financial markets because they are backed by the US government. They can always just simply print more money to repay their obligations. The US government has never defaulted, as of yet, on any of their obligations, and they have an excellent credit rating, despite some recent agencies trying to downgrade them for clout. So SPAXX or FZFXX, it doesn't really matter which one is picked. They both pay interest on the last day of the month, which means you can earn compound interest. Compound interest in investing is a super powerful concept that refers to the process of earning interest not only on the initial principal, in this case that would be your uninvested cash, but also on the accumulated interest over time. So it's your money earning more money for you. Okay, so maybe you're not a Fidelity user. Well, you're in luck because Vanguard also offers an incredible money market fund with an even higher interest rate. The the Vanguard Federal Money Market Fund, or VMFXX, has a 7-day yield of 5.25%. That is incredible. To put that into perspective, someone putting $100,000 in cash in one of these accounts can get $5,250 for doing absolutely no work and taking essentially no risk. $5,000 is easily enough to go on a couple vacations and enjoy some good food or pay for other living expenses. Vanguard's money market fund is largely comprised of US government securities, extremely low risk, stable, and provide easy liquid cash. They have a super low expense ratio of just 11 basis points. Just like most Vanguard products, they're super cheap, and best of all, they have high income potential. Vanguard's money market funds have been growing people's wealth since 1981, but two companies that continue to line the pockets of its investors are Realty Income and VICI Properties. Both are near its 52-week low, and both currently have a starting yield of over 5%. Catch more about these two stocks right here. Alright guys, there's no such thing as free money, but with Fidelity and Vanguard, you have the next best thing. Leave a like, subscribe to the channel, and help out a small-time YouTuber. My videos are always found in podcast form under the Collected Cash podcast name. And I'll catch you on the next one.